On. Good morning, everybody. My name is Chris Sanders, and welcome to the Breakfast Check-in. Although Lorna did say we should call it Breakfast Club, which actually I quite think is a good idea. So thanks very much, everybody, for joining. We have a pretty full house today, 34 or so participants, and we're talking today all about payments, billing, and customer experience, which is something that I think we're all keen on. I'm really pleased to introduce you to Tim Annis from an organization called Bluechain, relatively new in the software game, but Tim will talk to you a little bit about that. And what I'm going to do is I'm going to share my screen. We've got some polls coming up today, and there'll be a Q&A at the end, and also some feedback on this session and what you want going forward if we want to do these again, and what sort of subjects you want to sort of cover. So that's it from me for the moment. I'm just going to share my screen, where you'll be able to see, hopefully, the pack. Okay, if you can. Okay, right. Okay, give me a thumbs up if you can see that. Excellent, thank you very much. And I would very much like now to hand over to Tim, who will take us through this. Tim, you're on, my friend.
Brilliant. Thank you very much, Chris. And great to see everyone again after a long year that seems to have flown by. So Chris asked me to come along and do this. I've put together a number of slides talking around, as Chris said, payments, billing, customer experience. It's not just about Bluechain. Just talking about some of the things that have gone on in the payments industry over the last few years, I suppose. And Chris, if you can move to the next slide, please. Really, that looks at how payments, it's a hugely evolving space, hugely innovative, and huge amount of revolution, I would say, in some of the stuff that's occurring across it, certainly from my perspective. And I worked for American Express for 13 years. I've been in payments now for the best part of 20 years, both from a payments term, issuing and acquiring, so people giving out products to people and helping them take payments as well. And I've worked across a number of technology companies outside of American Express around accounts payable and accounts receivable before I came to Bluechain. Move on to the next slide, please, Chris. So I wanted to just give you a bit of perspective on the payments industry. And it is, as you can imagine, a huge industry, right? So in the UK in 2021, there was 40 billion payment transactions. So that's not the dollar value or the pound value of it. It's the number of transactions that happened. So 40 billion, of which 34.5 were consumer transactions and 5.5 billion were B2B transactions, so businesses making transactions. A tremendous scale of number of transactions. I just put up a few stats here that I took from UK Finance. So 1.9 billion of direct credit, which is BACS payment, so account to account essentially, or pushing out a payment. That's a massive number. CHAPS payments represented 90% of the value of those payments, but 0.1% of the volume, which is an incredible stat in itself. Next one, Chris. And checks have gone from nearly 1,600 plus in 2006 to 150 in 2021. That's millions, by the way. Sadly, it's not 150 checks in circulation in the UK, which would be great. And I think the reality of that is 150 million is still a huge absolute number, which is mental in the 21st century for someone who's worked in card payments for a long time. Next one, Chris. Faster payments. Hopefully, this is something you're familiar with, and I'll touch on it a bit later, but the number of transactions that are being completed as a faster payment, so that's instant or near enough, maximum is 2 hours typically, is 3,633,000 transactions, right? So that's huge. Whenever I'm making a transfer, whether I'm paying someone or getting paid by someone, a friend or something, it's almost always going via faster payments, which is for me personally has been really good. Next one, Chris. Cash, as we probably expect, declined. That decline was rapid over COVID, as we'd also probably expect, but it's actually now creeping back up in 2022. The cost of living crisis is changing some of people's sort of thought processes and perspectives, and cash is always seen as a way to have absolute control over what you're doing. It has its own inherent problems, but that's one of the things that's probably reversing a little bit at the moment. Next one, Chris. And buy now, pay later, which we've seen across COVID, had leapt up in utilization, and I'll touch on that a bit more in a moment. But that's now representing 6% of e-commerce transactions. Click. So, and then 50% of transactions across the UK were, the actual transaction numbers were card payments as well. Again, something we probably expect. Credit and debit cards are pretty prolific, particularly debit card has been on a rapid rise over the last few years. Very similar to cash in lots of respects, but obviously in a convenient form of using a card. Next one, Chris. And almost a third of those payments in the UK were made via contactless methods. Again, we probably expect that. Things like the London Underground drives a huge amount of that transactional volume, but we've probably all seen businesses that only take card payment now, and typically they're expecting you to tap and go, whether that's on your card or via a phone or device. So just before we move on, just wanted to ask a quick question. Chris, if you could run that poll.
I will. Okay, so the first poll is payment tech. What are the most popular payment methods in your business? There's a single choice for this one. So is it BACS? Is it credit or debit card? Is it direct debit? Is it buy now, pay later? Or is it payment initiation, open banking type activity? So up to 76% have voted. Okay, 76,
But not just
91% voted.
This is not going to put a new chancellor into power, just in case anyone any votes could cause a new chancellor to turn up.
Yeah, I understand Mr. Blobby is looking for a job at the moment. Okay, so let's end that poll and let's share the results.
I promise on Saturday.
So okay, I'm just going to if you're not speaking, guys, if you could just put yourself on mute, that'd be great. So BACS, we've got 72%. In credit cards, we've got 9%. In direct debit, we got 16%. In buy now, pay later, 0%. And we've got 3% talking about open banking. Okay, thanks very much indeed. Well, as I said, I'll grab these, I'll stick them in an email, and I'll send them to everybody so you can see what what we're going to be talking about later on as well. Let me share my screen again and go back to Tim's presentation. Okay.
On to the next slide, Chris, please.
There we go.
So what I wanted to do was just give a little bit of a summary of some of those, evolutions and innovations that have come out over the last few years. So payment initiation is one that, I'm very familiar with, understandably being in payments. I'm assuming probably a lot of people have probably encountered it at various points, but not everyone necessarily. And to very quickly summarize it, payments initiation is the ability to click a button on your phone and have it automatically take you into a banking journey to do an account-to-account transfer. So that means that you're not having to go, okay, I need to pay this. I'll go and log into my online banking. I'll set up a payment. I'll enter in the sort code and account, all that kind of stuff that's irritating. And potentially very importantly for this audience is someone's not having to enter the reference data. That's done automatically, so that you're not having the ability for Tim Annis to fat finger in how he puts his account number or his invoice number or anything like that. So it's really, really interesting capability. It's very much linked to faster payments, so it enables you to get paid immediately or instantly, essentially. And a large proportion of what it does is create a hassle-free experience for customers. So it makes it much simpler for them to do something from their bank account. It gives the business that's using it an integrated payment flow. So, very easy for them to connect that to their website. Let's say if you can just press that button and it will take you on that open banking journey. And it's very secure, is one of the intentions behind it, because obviously you're using your biometrics typically to log into your online banking when you do it, when it takes you on that journey. So you're not having to provide passwords online, share card details online, anything like that. So a lot of really interesting benefits to there. There's a lot of different players in the market, from Tink, Bank to TrueLayer down here. One of the key benefits to it, though, as I would see, is the fact that the cost is significantly cheaper than a card transaction. So rather than doing a debit card transaction, doing an open banking transaction will cost you, let's say, 0.1%. which is pretty cheap, usually capped at a certain level as well. So it's a number of benefits there. The reconciliation benefit of people giving you proper reference data, the cost benefit. The slight downsides to it is it's from your bank account. You know, someone like me, for example, I typically use a card to pay a credit card. There's reasons for that: protection of a credit card, credit limit that I've got, etc., etc. The ability to use that as a, you know, some form of short-term lending for myself personally. So, you know, there's pros and cons to all of these things. But it's a, you know, growing area linked to open banking, and definitely one that I would think is of interest to this audience. And I was really interested to see the 3% piece on that previous poll. Chris, do you want to move on? I should say as well, if anyone has any questions, please do feel free to ask them as we go. Rather make it interactive than just me talking. But I will go into buy now, pay later, probably even more familiar to people than payment initiation. We've certainly probably seen it in the news from a consumer perspective. Had a huge amount of growth over COVID. Not that surprising that it's reached 6% of e-commerce transactions in a very short window, very few years. All of the financial uncertainty that the consumer was facing and businesses were facing over the last few years puts you into place. Well, I'll buy it now, but I won't have to pay it straight away, or I can pay it over time. Put it into more manageable chunks is definitely going to be an attractive option, right? So, and for anyone who's not clear on buy now, pay later and hasn't seen it, it's pretty Ronsil. You know, you buy now, but you pay later. There's not a great deal more to it. There's two routes to doing it. One is just typical financing, consumer credit financing. So that the provider of the buy now, pay later service, the Klarna, the PayPal, will take a credit risk on your customer. So they're taking the risk, not you. And they will lend them a certain sum. Usually these are consumer sums, typically not much more than 1,000 or a couple of thousand at best. And then that customer then is entering into a relationship with them to pay them back over, you know, 3 months, every 2 weeks. There's various different iterations of how buy now, pay later comes to the table. The key point I would say for most of this audience would be they're taking the risk away from you, right? You're getting paid now, but they're taking the risk and getting paid over time. So that's one of the value points there. The other option for doing buy now, pay later is payment tranches. And that's where they essentially, similar principle of they're taking the risk away from you, but they're doing it onto a card of the customer. So they're then taking a payment off that card every 2 weeks, for example. So I bought the shelves that you can't see via Klarna, and that's what they did. They then took a payment every 2 or 4 weeks from my debit card, which is obviously gives them comfort and security that they're going to be able to take that payment from the customer, and again takes the risk off you. So the other thing with buy now, pay later, I would say, and you may or may not be aware of this, but it's come for some pretty bad press over the last probably 6 to 12 months. Some of that is around consumer debt and the rise in debt, but some of it's also around lack of regulation, risk issues, the follow-up and chase up of people who've defaulted, that sort of area. So it's not without its challenges, and it's a pretty immature market in a lot of respects. Certainly that regulatory standpoint is pretty immature. And right now it's being impacted by, you know, losses from people struggling to pay, and then rising interest rates, putting the squeeze on it in multiple different perspectives. So a number of things happening there. It's no longer the darling of the valuation phase. There was some tremendous valuations for businesses like Zip, like Afterpay, like Klarna, and they're now having a bit of a reality check. I think one area I think is really worth referencing though is B2B, buy now, pay later. So this is not that different to you know, to reverse factoring or factoring, in that you're giving that credit to your customer. The risk is shifting to the provider, similar to the consumer. Typically it's done in a 30, 60, 90 scenario rather than the, you know, any others, and it lets customers then extend terms on those payments, again just like buy now, pay later. Different risk model, very much focused on the risk factor and should we lend to this business, because businesses are very different to consumers, and really aimed at the Soho SME segment. I would say that the limits that I've seen have been relatively low, though some exceptions, but you know, several thousand, 5,000-10,000 sort of stuff, which is not massive. But some really interesting players in that space. I didn't put their logos on here, apologies for that, but someone like Biller.ai or Hakodo are a couple of examples of that. So that's buy now, pay later. Any questions or anything from anyone? Or should we move on? let's jump on, Chris. So one I thought was really interesting to raise with this audience was payment orchestration, and I'm not sure if it's something that anyone will have come across. And it's a really new area to payments, really focused around smart routing and dynamic routing of the transaction. So if you look at that graphic on the right there, you've got lots of different routes for a customer to come to you. It's coming into that payment layer that you've got on your website, in store. You've got internationally, you've got locally, you've got different currencies and all these different factors. You've then got your payment processor and how you route it to each different payment processor. And that's usually an individual route that you've then got to manage as a specific rail. That can have problems around transactional drop-off, transactions failing for reasons, everything from technical through to risk. Maybe the payment service provider doesn't like the risk of that particular card member or the industry. So a lot of different kind of factors that can cause that. Now, a really interesting stat I found when I was doing the research for this was failed payments cost around about $118 billion in 2020 globally, which is a huge sum, right, for businesses where I've tried to make a payment, it's failed, and either I have not carried on to complete that payment or something else has occurred that stopped me, right? So I've not been able to carry it on. So Chris, could you just click to get the next graphic up? Thank you. So this is a graphic where you're using payment orchestration. I've stolen this from the IXOPay website. But really the idea is that you then have a single connector to manage all of those routes. And that's using AI and rules to go, a card member's turned up, they've tried to make a payment, it's been successful, or I want to route it this way based on this card member and the cost that I get with this processor, or I want to route it this way based on risk, or I want to route it this way based on other rules that I might have come up with. Now, the point there is that it's doing this automatically. You can have static rules to say route this type of card member to this route, but obviously they only follow a static journey, whereas the ability here is to go, here's a bunch of different rules. When a card member turns up, follow the right rule for that card member. If it fails, reprocess it down this channel and do it automatically. So it cuts out those failed transactions significantly. One of the simple benefits of that is customer experience, right? If you don't have failed transactions, you're able to follow that customer experience, and your customer is paying you or buying whatever they're trying to buy from you. So huge kind of benefit there. There are some significant stats on the impact of that customer experience from failed transactions. Like 37% of businesses saw it as a fairly catastrophic failure in customer experience. Someone's gone through all of the steps to want to buy, and then they fail at buying. Not great. So really interesting area. There's a number of other elements that it can consolidate through that single connector. So that the concept is the single connector is reducing the kind of IT overhead, the management overhead, the need to do various things. And that, IXOPay is a good example here. They have a whole bunch of risk or routing or reconciliation tools that they bundle into that to support you, which is really powerful. And then the other piece is around international markets. So the ability to then connect into tools in other parts of the world that let customers come and pay from you in their local tools rather than just Visa, MasterCard, for example. So bringing in Alipay or things like that makes it much simpler to engage on that, simpler to enter new markets, which obviously is a revenue positive thing for a business. If it's, you can do these things quicker or simpler or with less overhead. And I'm a really big fan of this. From my Amex days, I know that the ability to route it where the price would be best is really powerful for a business. So really good tool. Should we move on to the next slide? And again, please jump in with questions. So I just wanted to throw up a number of other things that have occurred in the payments landscape, which you may or may not be aware of. I'm not going to go into huge detail on these, but secure customer authentication came into play in force towards the end of last year. And it's one of those things where someone is going to have to do more to authenticate their customers, as someone being a card provider, a scheme, or a bank, or a business. And so that's having something the customer knows, like a password or a PIN, something the customer has, a phone or a hardware token or something similar, and something the customer is, so they're biometrics. And the point there is that you've got, similar to kind of multi-factor authentication, you've got 3 different factors to authenticate that customer to make sure that they are who they are. And this is obviously to help prevent fraud for customers and for businesses and for the sort of networks in between, and ensure that those customers are protected. but it has the downside of making the journey more complex and the likelihood of dropout more complex because you've got to do more things to do it. So it's certainly been a bit of an experience from what I've seen for some of the payment in my colleagues. So
yeah, what's interesting for me, I had a note from my bank not that long ago on my business, which then said, right, you need to completely reauthorize yourself, and it was a real pain actually. There was all sorts of things I had to do in order just to sort of say, yes, it's me, and I am who I am, and which is, it was a pain, but I'm glad they did it, but it was still a bit of a nuisance, to be honest.
That you didn't send back, you don't realize that I'm the infamous Chris Sanders then?
No, I didn't say, do you know who I am? No. No, they would have cut me off straight away had they done that.
Tim, Chris, I understand it was the facial recognition that they didn't like.
Yeah.
Yeah, exactly.
Okay, let's
bring up the next one before Charles. Yeah. Pay by link is something that probably some of you have perhaps seen. We've certainly experienced. Really interesting solution. You can deliver a link out, whether it's in an email, whether it's in a text. Someone can click that link and be taken on a payment journey. It's not particularly new technology, but it is one that's had a lot of kind of drive, particularly over the last couple of years, because we can't take payments over the phone necessarily as easily because we were no longer in the office during COVID and people were scrambling to, how can I deal with that? Or it's a simpler experience for my customer to just be able to click a link rather than have to phone me in or log into a website, things like that. So it's certainly, it's driven. One of the challenges around this is that it's a real fraud driver. So, we will no doubt everybody on this call have had an email from Amazon or Royal Mail or a phone call from HMRC saying that we need to pay one of these things. And lots of people get caught out by this. And the challenge with that is that the fraud cost that comes with it is that people get used to paying by link and then they automatically pay by link. And there's no security around that when it's just coming in a text message. There's no ability to verify who that customer is and whether you should actually be paying them. So it's one of the challenges that's certainly been seen. And
yeah, fine. You're right.
Yeah, I am. Thanks. The rate of rise in 2021 was 123%. So 350 odd million of fraud from pay by link. So great solution, but not without its risks is really the point. I mean, in Singapore, as an interesting angle, they've actually banned any form of payment link in text or email because of the fraud. And it's just an easy way to cut out that particular avenue. Next one, Chris, please. Next one was confirmation of payee. Oh, you've gone a bit fast. Confirmation of payee is where you are confirming who you're paying ahead of a bank transfer, right? And we've probably, if you've done bank transfers, perhaps seen this particular screen I've got here. You've put in the details, but unable to check those details, it doesn't register. So this could be as simple as me putting in T. Annis instead of Timothy Annis into the payment. And my bank account is under Timothy Annis, so T or Tim Annis doesn't register, right? The negative potential outcome of this is if you're not giving your customers a clear name that goes on the bank account, they'll try to make a payment to you and it will come up with this sign and they'll go, oh, something wrong here, I'm not going to pay it. So great positives for customers and protecting them, but obviously the potential risk is that people don't pay you, then you're not getting paid, right, because they're concerned. So just an interesting one to raise. Next one, please, Chris. Faster payments is an underlying thing to all of what I've been talking about. This is the ability for the real-time faster payments network to deliver payments essentially instantly. The sort of term is up to 2 hours as a maximum, but the reality is usually seconds. I have paid money to people and had them had it turn up in their bank account before I've even read that you've completed the payment message on my phone, right? So incredibly valuable for businesses in the ability to make a payment at the last second, but still be within terms. But you're keeping the money in your bank account rather than having to send it 5 days ahead, 3 days ahead, or even just remembering to do it in the morning. So really powerful tool to drive a lot of the capabilities that are coming into the market, like payment initiation and others. And the last one, Chris, if you go on to that last one, is QR codes. And hopefully, again, we've all seen this during the COVID times. It proliferated significantly over COVID, to the better, I would say. If nothing else, it's much nicer to just scan a QR code and carry on chatting with your friends in the pub than it is to queue at the bar on your own, waiting to, get a beer. So, or order food or get a menu. And there's lots of different solutions that QR codes can solve for, whether that is, taking you on a payment initiation journey, whether that is on your bill so that you can, your utility bill that you get mailed, you can scan that, lots of different ways. So I think it's a really great adoption. It's certainly been rising in utilization now over the last couple of years. Okay, so that was just a bit of a run through of some of the innovations I'm seeing in the payments world, and I think it would be interesting for you guys to see. Quick little poll now. So Chris, if you would run that.
Okay, so second poll, this is all about customer experience. Okay, so I'm launching it now. So what are you hearing from your customers? I hope you can all see that. What are you hearing from your customers? Are they cancelling direct debits? Are they asking for payment extensions? Are defaults increasing generally? And are they taking more control of when and how they pay? So we're up to 37%. 65%. There you go. Yeah, asking for payment extensions. Yeah, that's quite a few there. We're up to 80% now. Let's get it into a little bit more. Okay, let's 82%. Some people are having to think about this one. Sorry to do this to you so early in the morning. Okay, up to 82%. Let's end the poll and share the results. Okay, so here we go. So are they cancelling direct debits? So that's a 10%. Obviously that happened quite a bit during COVID, and the organisation I'm working for currently, there are some elements of that coming through. Not so much in the business, certainly in consumer. Are they asking for payment extensions? 45% are definitely doing that. I don't think that's going to go away anytime soon. 14% are saying that defaults are increasing, and are they wanting to, or are they taking more control of play? So 31% of that. Okay, that's interesting. Thanks very much, guys. As I said, I will send the results out in an email later on this week, so you can see for yourselves what's going on in the market. Okay, let me close that one down and continue on here. Tim, back to you, mate.
Thank you very much. If you can move on to the next slide. It's still on minimize, Chris. I don't know if you want to make it bigger again, just for people's eyes. But so one of the things I wanted to touch on here is around customer experience. So the tools that I've just talked through are about driving a better customer experience via payments. So whether that's payment initiation, making it hassle-free, making it easy, whether it's buy now, pay later, letting them do as it says on the tin, but giving them flexibility around their cash flow. Whether it's confirmation of pay, giving them security around who they're paying and whether they should be paying that person. All of those tools are designed to drive better customer experience. Customer experience doesn't always mean faster and quicker. Sometimes it means more safe and secure as well. So strong customer authentication sits in that bucket. And the reality is, for me anyway, and everything I've seen, and I'm sure a lot of you would agree with this, experience is everything. Customers that are happy will buy more, will do more, will advocate for your business more likely, and it's really critical to get it right. I again found a bunch of stats on here. There's a ton of different stats for all three of these quotes that I put on there of different values, right? But I thought these were quite impactful. 86% of B2B buyers willing to pay more for great customer experience. Now, the reality is of every single B2B buyer, including every single one of us who I'm sure buy things as for businesses at points, is also a consumer and who lives in the consumer world that's driven by Amazon and Deliveroo and things like that, right? So they expect experience as part of their consumer lives, and that then comes across into their B2B world, right? They want to have a great experience there as well, whether they realize it intentionally or not. 80% of customers say the experience a company provides is as important as its products. You can have a great product, but rubbish customer service, and we know that people will go, yeah, it was good, but you're just too much hassle to do. So I think it's really important to recognize that experience is not just about having the next new shiny thing. It's about everything that flows through that, all the way through the customer journey. And that, for me, that customer journey starts when they buy, but it doesn't end until they've paid. And obviously, they often will pay monthly. So you've got a constant customer experience program. So another stat here, this was from McKinsey, was transformed customer experience, where you're really focusing on that experience, leads to a 15% increase in revenue. And that's talking about the processes that go around it. So payments is a big part of that process. Billing is a big part of that process. Reconciliation and account management is a big part of that process, as well as just, I've got a nice product. So just some interesting stats that I wanted to throw out there. Now I kind of, I look at it and think, customer experience, how can we improve that? And one of the things that I tend to see is that billing, collections, reconciliation, receivables, the billing process is the most frequent touch point you have with a customer, often as not. If you're doing it on a monthly basis, then that needs to be as good as the front end sales process, right? And I think that's really important to recognize that. And lots of businesses don't recognize that, right? I could tell you at length my story around, sorry, I think there's a Shell person on here, but my Shell experience for billing was not great recently. Apologies for the Shell person, but it's the truth. We did resolve it in the end. So anyway, customer experience really important, and that leads on into the next piece. So there's another poll now, Chris.
Okay, let me just hit the poll button. There we go. So this is poll number 3, and this one is all about the Bluechain section, as it's called. So what is here we go. I'll just launch that. So what is most valuable to your team? Is it better visibility of the invoicing process? Is it easier collections that take less of your team's time? Is it less reconciliation issues? Or is it simpler query and dispute management? So those are your 4 choices. So what would be the most valuable for your team? Is it better visibility of invoicing, easier collections, less reconciliation issues, and simpler query and dispute management? I can think of a few organizations that less reconciliation issues would be a good thing. Okay, so we're up to 80%. 80%, 36 people still on, so that's 80%. Okay, that's good. 85%. Right, I will end that poll now. Okay, and I will share the results with you. So better visibility of the invoicing process. That is 17%. Okay, easier collections, 30%. Yeah, wouldn't we all like that, eh? 23% on the reconciliation issues, and simpler query and dispute management. So that is tied first, which is interesting with easier collections. So disputes are still a problem, I think. So okay, I'm going to stop sharing that now, and I'm just going to go back out of there. Okay, we're back on the presentation there. Tim, over to you.
Fantastic. So the next one that I wanted to talk to you about, and this is an innovation piece as well, is around request to pay. And full disclosure, Bluechain is a request to pay company, right? So I'm going to talk to you about what Bluechain does, but I'm also going to talk to you about it generically around, request to pay as a tool, because I'm sure that's what you prefer. And request to pay is coming out in a bunch of different markets around the world, lots of different flavors. Europe has its flavor, India, Australia, the UK. Common underlying theme, though, of two-way, real-time, secure communications between two parties, a payer and a biller. And that's something that doesn't really exist in the world of payments and billing, to my mind, today. So Chris, if you would just tap through, there's a couple of graphics here. Bluechain is a platform, though. We're created to deliver on this request to pay experience and that connection and the security that comes with it. So we move on to the next slide. There's quite a lot of tapping here, Chris, so you might want to just tap through it and I'll talk as fast as I can. But payment without request to pay today, it's like a wall. You throw that invoice over the wall and you have no idea what happens to it until something comes back, unless you climb over the wall to find out, go around the wall, whatever you want to say. So that leads to a number of challenges for you as credit managers to understand, well, what's going on with this invoice. I've now got to chase, I've got to follow up, I've got to engage with my customers and spend time, effort, and money to do that. At the same time, it's not great for the customer, because they then go, I've got this bill, it's paper, it's PDF, I've now got a problem with it, or I need to chase in it, or I've got to go and do something manually to pay for it. And all of those things create challenges potentially for that customer. They've got no real connection to their biller, and it's typically a laborious and disengaged process. So bunch of challenges. Even when they do pay you, that still might cause you a problem. You've got money, but you don't know who it's from, what it's allocated against, and that creates time, effort, and cost for you to try and resolve that. Keep clicking, please, Chris. So, no connection, that leads to no real link created with your customer. It becomes a commodity-based relationship, and it's more challenging to drive. And don't get me wrong, there's lots more to engaging with a customer than just billing and payment. But I'm talking about this particular component of it and how it can disengage customers very easily by having a very nice shiny front end, but then falling down at that last component, potentially with lack of investment or whatever it might be. So we move on. So the idea of request to pay in that two-way channel is it takes that wall out and it creates that real-time connection between you and your payer. So now you've got, and please keep clicking, Chris. Now you've got visibility of what they're doing with the bill that you sent them. So you can see they've received it, opened it, planned to pay it, paid it, part paid it, don't want to pay it, want to talk about it. You can put all that data into your core systems rather than having to have them in lots of different spots. And it's going to save you time, to my mind anyway, in terms of I don't have to chase all of these customers. I only chase the problems. Back up a bit, Chris, sorry. I only have to chase the customers who haven't taken that action, who haven't paid. So, that makes the queries and the management of that process and the engagement with your customer much better, much more seamless. And it means that your teams can spend less time on having to chase everybody. They can just focus on the ones that haven't paid. So you're kind of getting that real-time insight, ability to forecast, a plan, and that communication channel can then be used for more things than just sending a bill and receiving a payment. It becomes a query and dispute management tool that you can go, okay, there's a problem, deal with it where you receive the bill, not in a separate thing which you then file and wander off, and deal with just on the day that it's due. Lots of things that we know occur in this world. So we move on, Chris, please. So the payer's perspective of that is that they've now created that real-time channel with their customer, with their biller. So they now have a much easier way of engaging with the bill they've received. Super simple experience. They have, quick and easy way to contact them directly on the bill that they've received. They can pay when it suits them, obviously to terms, how it suits them, and with what suits them. So, are they on the road? Are they paying with a credit card? Do they want to use bank account or buy now, pay later? They can do it all from the same place based on their financial needs. It's going to save them time and effort. They can, if they're a business, put that into their core systems like accounting packages and similar. Again, saving them time, meaning they don't have to touch bills lots of different times. And it makes it much more effortless and painless to deal with their biller. It comes back to that customer experience quite simply. We move on, Chris. So really what that's doing is bringing you closer to your customers. You've got the insights around what they're doing with the bill that you sent them. You've got a much simpler and better way for them to raise queries and disputes. You're preventing the need to chase them, follow up with them. The typical letter that says, if you've already paid this, please disregard this paper letter that I, at some considerable cost, sent out to you. There's the great example of HMRC who managed to give you money whilst pissing you off because they sent you a check in the post for 20p. Like, give it to the country, guys. I can live without 20p. It's just ridiculous. And we know we've all had probably similar sort of experiences like that. So, for me, it's all around creating that closer connection. We know that experience matters to our customers. We know that they have lots of demands. They typically aren't what we think. It's all around convenience and simplicity for them. And we know that those customers generate revenue, but it's employees that drive experience. If we're constantly chasing them about bills, that's not a great experience. So, I think it's a really great way to get closer to those customers and to deliver a better process around billing, collections, reconciliation. So the other piece that comes with that is it creates more opportunity to do things with your customers. So that could be offering them financing across that bill as a way of creating revenue. It could be giving them tools that let them do things faster or simpler and using that as a revenue potential. And there's a lot of different areas that you could bring into it, whether that's just simply, hey, you bought a TV 2 weeks ago. I'm sending you a request for insurance because actually you might want this, and putting it into a position where they've received it and they can pay for it right then and there, not click a link and go somewhere else and then get distracted by the cat and all that kind of stuff that occurs and changes customer journeys, right? So really important around experience is what request to pay is trying to drive. We move on, Chris. So that value, and normally this slide has more animations, but I thought by this point, Chris would probably be going to spare with having to click so many times. So, the idea here is you've got that connection with your customer. you are able to see what they're doing with more real-time insights. They're able to pay you. They have control and flexibility over how they do that. But you've got the visibility of what they're doing. But at the same time, they can do that for any of their suppliers. So it gives you the ability to give them a tool that lets them manage their accounts payable far better. We can put that data into their accounting platforms. Again, that's saving them time and effort, much better customer experience for them when they're dealing with you. And they actually can use Bluechain. It's not inherently one way. They can use it to build their customers. So you start to look at it and go, well, actually, there's ways that revenue could be created, experience can be created, benefits can be created for my customers that can expand out of there. And all of that drives that customer experience, drives that revenue opportunity, and changes the way that businesses can connect with their customers.
So if you're looking at a market for this, I mean, this is great for things like Soho and SME markets and stuff like that. We got a one-man band type thing like in building trade and stuff. Where
Absolutely.
is that would that be kind of like where this is aimed at, Tim?
Absolutely, consumers and the lower end of B2B at this point in time. So consumers by nature, because they're individuals, but Soho is obviously small or one-man bands. SME is typically small. Once you get into that, I've got a complex accounts payable process, accounts payable department. Current fit for Bluechain, at least, is not great for that area, but just because there's a number of different approvals. That's on our roadmap, obviously, because I know from the experience of talking with many of the people who are either on this call or are part of this group, that just as many problems occur with the big businesses and knowing what they're doing with the invoices occur with the small ones, right? The difference is you've just got lots of smaller customers usually. So the engagement with all of those is harder because they're an individual call or chase or whatever. So taking that piece off the table is our first step. So that is the end of this. What I wanted to do as part of this slide deck really was to give you a bit of a view of some of the things that are going on in the payment space that could be of benefit to you, talk to you about request to pay selfishly, and give you a bit of an understanding of what that does. And if I could leave you with, any things from that poll that we just went through, request to pay is about delivering a better real-time insight into what your customer's doing with the bill they've sent you. At scale, that for me is tremendously valuable. It's about driving a better collections process that takes the time and effort away from you as a business and puts it into the hands of your customers in a positive way, with you having insight of what they're doing, right? So giving them control so that you can try and take that control back and get that reliability. And then giving straight through reconciliation on any presentation. So you get every request that's sent is linked to the payment. Even if it's a part payment, you're not going to have 50 quid gas bill that you've then got to work out who it's for coming into your bank account. So, 3 tremendous points alone before I talk about fraud, the other areas you can drive value and revenue, which I think are as equally important, but you start with the core pieces, right? Particularly for this audience. So those would be my points. I'd love to chat with anyone, whether it's about other payments or anything else.
Yeah, I mean, if there's the contact details there for Tim, if anybody wants it. What I want to do is, I just want to run this poll, and then we'll go to Q&A with Tim. So we'll run the poll, we'll then do Q&A, and then we'll switch off the recording, because I know some people don't like to ask the questions on a recording. So I'll just run this quick poll, just to sort of find out what you thought of today, and then we'll have a Q&A, and I'll switch the camera off. In fact, what I think I'll do is I'll switch the recording off. I'll switch the recording off now, okay? And then I'll stop sharing as well while I'm at it. Okay, so I'm just gonna stop the recording now. So but we'll carry on with Q&A and the polling shortly afterwards. So thank you very much indeed, Tim, and everybody for joining. And I look forward to seeing you all again next time. And I'll stop the recording now.